What's going on, guys? I hope you're having a great weekend. In this video, I wanted to go over the positions I put on and took off this week and discuss one of my wheel strategy positions. So this was a really strong week in the market. We were up in total 1.78%. So that's a good thing for long-term holders, but for me, I generally kind of focus on a strategy of putting put spreads on, and to collect a lot of premium, you want higher volatility. You kind of want to see the market dip every once in a while. So this week is good for taking positions off, but it wasn't very good for putting positions on. And that's kind of how we've seen the market go the last couple weeks. We've kind of just seen it keep uptrending. And with that, it kind of becomes a little bit difficult to put positions on. So I only actually put one position on this week, and it was this put spread. So I had to go, like I said, a little bit closer to the money. So we went for December 17th, which is around 45 days out, at the 415, selling the 415 and then buying back the 410 here. So we were able to collect $26, which is a little bit higher than I normally collect. So I was kind of happy with that, because we are a little bit close to the money, but I do think the market's going to keep uptrending over the next kind of few weeks. So I'm not super concerned about this position and being a little bit close to the money. The other positions that we were able to manage, we were able to take off our November 26th 400 and 405 spread. So we were able to buy it back for $3. And then finally, basically the same thing, another November 26th spread that's at 385 and 380, and again we were able to buy it back for $3. So I mainly like to target the $20 to $25 when you're collecting on a spread, and then around basically $3 to $4 when I'm buying it back. Here's the spreadsheet that I track all my trades on. So here we see that November 26th trade that I was talking about, that we closed at the 385 380 spread, and here you can see it actually says that we are down, or we bought it back for $4.32. That's because, right, the $3 is what I closed it for, and then there are 66 cents basically per trade. So right, there's two trades here, because you are selling the 385 and then buying the 380, and then when you close the trade, you're just doing the reverse, right? You're buying back the 385 and then selling the 380. So when you do that, right, there's going to be basically 66 cents for both of those trades in commission, so it ends up being $4.32. So that's what you're seeing here, and that's where the difference comes from. So we have that trade that we closed. Again, we have this trade that we closed, basically the same thing, but it was the 400 and 405 and 400 spread. And then the other trade that we discussed that we put on is down here, and this one we had the $26 that it showed last, but you have the trading commissions that are subtracted from it. So we actually ended up only collecting $24.68 on that trade at the 415 410 spread. The other trades that we have highlighted in blue, we've taken or taken off either or put on in the last 2 weeks. So we had this rocket trade that we discussed a little bit, where we sold a call at the 1750 strike for $22.34, and then we just bought it back here a couple weeks ago for $3. That one, because it was less than $5, TD Ameritrade only charges you 1 cent to close the trade. So that's again where the difference comes from there. And then finally down here we have the rocket trades that we put on. So we put on these couple trades last week, and we were able to collect $23.34 for them. So we bought them back as well this week for $5 each. I actually bought them back yesterday because we saw a rocket dip. I thought it was kind of a good opportunity to get out of these spreads, because I think there's going to be a bigger opportunity this next week. Basically, Rocket's kind of seeing a turn down in the stock price, and it's kind of experiencing a lot of volatility. So over the last kind of 5 days, we've seen it go up and then down and then up again and then back down, and you're kind of getting this feeling, or at least I'm getting this feeling, that the stock is about to kind of spike a certain direction. There's a lot of bad news baked into the stock already, and I kind of see it turning around and starting to make a run back up. The earnings kind of came out and they were all positive. So they beat by 18.5% and then beat by almost 7% on revenue. And with such a low PE ratio, I don't really see how this stock can keep kind of trading so low. I could see this PE ratio being basically double, being around 10 to 15. And I think that's even low for a stock like Rocket. The biggest thing is that Rocket's kind of experienced a lot of growth in the last year, from having all the being able to take on and issue out a lot of mortgages with the housing market being so strong. So it kind of pulled back over the last kind of 6 months because of a lot of scares with the housing market, and people kind of being concerned that the housing market's going to fall off and then Rocket's business model is going to suffer. So really that's kind of the trade that I'm looking at over the next week. I'm hoping, like I said, that we kind of get a run up on Monday or Tuesday, and then I can put a spread back on, put a call back on, because really that would help a lot. I'd be looking kind of for the end of November, because what we're seeing right now is November was kind of a weak month overall. So normally we're kind of trying to collect around $200, and November right now we're not going to be able to get any more spreads on. We've taken most of our spreads off, so anything that we can get on top of this is going to have to come from the wheel, whether it's SOFI or Rocket. But SOFI, kind of the last thing here we're seeing is SOFI, it's ran up as well over the last week or so. So we've seen SOFI kind of start here down at $20.50, and it's ran all the way up to $22.50. So I have a whole video, and if you haven't seen it, go check it out on my SOFI trades. But basically we're sitting on a $20, the sale of a $20 call, and that's for December 17th. I'm hoping over the next week we kind of get some more expansion in the options chain for SOFI, because right now we're kind of sitting there in between, and it's kind of difficult to roll out this trade. So I'm hoping we get a little bit of a spike over the next week in the stock price, and we can sell, basically roll the option back out. So we'll have to buy this one back. This one I believe is kind of around $300 right now, so we'll have to buy it back at a loss. But if we can roll it out a little bit further in time and basically collect that $300 to $400 back, we'll still be in a good position, and we can capitalize on some of the stock appreciation that we've kind of seen, because right now we'd lose out on about $250, basically the difference between $20 and the current stock price of $22.50. So that's kind of my plan for the next week or so. I'm hoping to basically figure out, find a good time to put a new call on for Rocket. I wouldn't be surprised if the stock starts spiking up back towards that $20 mark. So I'm hoping we can kind of get in on the run up and basically capitalize on a lot of that volatility. And then again, kind of a similar situation with SOFI, except we already have a call on in that position. So I'm hoping we can basically roll that call out in time and keep gaining the appreciation of the stock, because SOFI stock has basically been blowing up over the last month. We've kind of seen it run up actually almost 35 to 40% here. So anyways, I hope you liked the video. If you did, please drop a like down below. If you want to keep seeing videos like this, make sure you subscribe and let me know in the comment section. I like doing these portfolio videos. I think it gives you a view into how I'm actually managing my positions. So I hope you enjoyed the video, and like I said, drop a like down below, subscribe, and I will catch you guys next time.